Hey, it's Soleil, and this is episode 443. And I wish it was episode 444, but you got to go through 443 to get to 444. So, looking forward to that. Nice, popular number. Yeah, so probably make this one short and sweet. I wish I could just get in a little time machine and wake up tomorrow for 444, but them's the breaks. What are you going to do? Had to go through 442 episodes just to get to this one. Might talk about Tesla a little bit as well because their earnings call is sneaking under the radar. Like all I think about is Strategy's earnings call, but Tesla's going to sneak in here on the 23rd. What's up, Howard? Sorry, maybe the hardest word, but waiting is definitely the hardest thing to do. Your sound sounds fine. Appreciate it. I even got everybody else worried about my sound checks. I'm not the only one having anxiety about it. Appreciate it. Magic P. Let's talk about Tesla drive-through theaters. Okay. Is that a real thing, or are you just popping shrooms? So I've also been digging into Grok. Probably talk about this a little bit, and really trying to understand the mechanics around the dividends when they're paid out. A lot of times the price will run up, and then I think most people are used to seeing the prices of things just drop by whatever the dividend is. That's pretty normal with a dividend stock. But I've been learning some things about how the share prices work with some of these covered call ETFs, and probably just ETFs in general. I assumed badly that I was in competition with the market sentiment of these products like MSTY and IMST, and that if buyers rushed in, that they could pump up the price through positive market sentiment. And that was not correct. So I was under the delusion that these covered call ETFs follow the whole rest of the market, right? So Strategy, Tesla, any of these other stocks, if the market wants the price to be higher, the market will be higher because the buyers will rush in, and then a premium will be assigned to that stock. We can call it MNAV in Strategy's case, or some kind of multiple with any other stock. And the ETFs don't work like that. So maybe I'm the only one who is learning this for the first time, but I was under the impression that if MSTY kind of like hyped up their stock or whatever, which they kind of do, right? They go for the eye-popping dividend payments, and then people rush in to buy the stock. Well, what I didn't realize was that as soon as there's any type of premium whatsoever, and it's a pretty small number because you don't really need much to arbitrage this profit, and it's not risk free, but it's nearly risk free. And so if the market drives Misty's price up 0.1% to like 0.5%, the APs, which are the authorized participants, issue new shares, but it's really just probably just they write a check, and they're going to deliver a bunch of money, or it's in the form of like a basket of like 25 to 50,000 shares. And then those shares are going to be dumped on the market at the premium price, and it's going to drive the cost down back to the net asset value. So there's no way to really get price appreciation above the net asset value with these covered call ETFs. Misty for sure, but I assume, and there's certain regulations that they kind of have to follow too. I believe they're registered as a some kind of tax status or whatever. So they have to do like 90% of their uh the basically they have to issue return of capital up to some kind of percentage anyway, just to stay within certain guidelines. Now they go above that guideline of 90%, probably because they have to. The profits that they're getting with their covered call strategy is just a few percentage points, and it can't remotely cover the dividends that they're paying out. So they're doing the minimum that they need to maintain their status, plus more out of necessity more than anything. So I was wrong that I thought there was a chance to outperform with the covered call ETFs based on market sentiment driving their prices up. But that is never going to happen because the authorized participants are going to swoop in and sell shares and capture that tiny little profit. Now, this is not without purpose or benefit to everyone else. It's providing liquidity to the market. So, to a certain extent, they have a justification for existing, but it's just one more layer of friction that that anyone, if you buy something at $20 a share, you want it to be 21 later, you want it to be 22 later, you want it to be 25 later. And the only way that that's really going to happen is if their value of their asset, which would be synthetic strategy shares, also increase. So that's kind of another negative thing. Like the negative things that I'm learning just keep stacking up against these covered call ETFs. They just keep looking worse and worse every time I learn something new. So we'll be talking about that a little bit. Over the weekend, I've been doing my calculations. The 23rd will be the 6-month anniversary of the covered call challenge. So I'm kind of doing a deeper dive. Generally when I update it, I just like, okay, they're up, I'm up. I just kind of throw out the numbers. And now I'm doing a deeper dive to, to not only see who's up in dollar amounts, but who's up with a percentage amount. And I'm going to dig even deeper. I already downloaded the activity, and I'm going to dig a little bit even deeper and figure out, okay, how much premium did I generate over 6 months? And how does that compare to the dividends that were paid out? So look forward to that. I'll probably, so tomorrow's going to be kind of a fun one. And maybe I'll just go ahead and just schedule it and make sure that I do it at like 2 p.m. And so people don't have to like wonder when it's going to be and if they're going to miss it or whatnot. So let's just put me down for 2 p.m. tomorrow Eastern, which would be 11 Pacific, and we'll go into a deep dive of a 6-month update on the covered call challenge. So that's a little teaser, I guess. It's real. Okay, so drive-through Tesla theaters, like the old school drive-ins. Well, you gotta help me out. I'm having trouble imagining what's happening here. Oh, you left me a link. Appreciate it. What's up, Hash? Let's see. Ulti paid last week and didn't drop at all. I'm liking that one so far. Really? But I think isn't Ulti the basket of stocks? What did they pay? It was 645. Yeah, it's not down much. What was it up to? 650? What is this? Do they sell covered calls on all these positions? Yeah. All right, so when I click this, it just shows it. How the hell am I supposed to? Oops. Almost blocked you, Pete. Yeah, I'm thinking they all work pretty much the same way. But how long has this fund been around? Since March. Oh, so just 3 months. Yeah, this looks pretty steady. This doesn't look like it's doing a whole lot of bopping around. How did it pay? What was the dividend? Was it decent? All right, so let's check things out. Strategies has come back down to earth. And so I'm glad I didn't pay basically $4,000 a pop to roll these early. Didn't panic. I'm tempted to take another couple off maybe every day this week or over the next 10 days. But there's still a decent amount of premium to collect here. The other thing that the closer I hold this to expiration, the more gamma risk I expose myself to. Meaning, the closer to expiration, the delta of the delta is going to change more rapidly. So I should expect more like sharper price swings. If I let this go down another 10 days to the 31st, there'll be about 15 days to expiration on here. That's not too bad. So maybe I'll sit on this for a little bit longer. Of course, I kind of consider every dip a buy for strategy. So to a certain extent, buying back these calls could be cheap if the price runs back up to 450 anytime soon. But I think I'll just slow play it and I'll let this decay for another week or so. Same deal with the poor man's covered call. It would have been nice to take some profits when this was basically break even last week. Same with the 1080s. I think these were break even last week when we were at 550, or excuse me, 450. So kind of annoying, but there's still 150 days left of December. So hopefully this won't be like catching a falling knife. And so I feel like I need to get a long Tesla position. Maybe not anything too substantial. I'm torn between wanting to have a Tesla position on before earnings, but also like the only positions I can sell are strategy. So I don't want to take any of my strategy positions off before earnings either. So I'm in a bit of a pickle unless I use some margin. I suppose I could do that. But yeah, same deal here. Plenty of time left on this. Plenty of extrinsic value to collect. This is the covered call challenge account. The poor man's covered call are basically break even. And they've been on for 2 weeks. I would consider rolling this for a credit, except same thing. I'm just gonna basically sit on these for 10 more days and see if I can capture as much of this decay as possible before earnings. And then in the 5K account challenge, I've just got this one cash secured put expiring Friday. And I think I'm getting too many positions. So as soon as I get an opportunity, I'm going to exit some of these. Like if I, like if my ASST covered call, like if they were to just run up to 750 again or whatever, I would just say screw it and let this get called away. Definitely with GameStop. I think my cost basis on my GameStop shares is like 20. Let's just click it. Yeah, 28 bucks. So if I get called away at 26, based on the premium that I've collected, I'd be more than happy to dump that position. They've been underwhelming with their treasury strategy, to say the least. Yeah, I think that's about it. Let's check the chats. We might be able to call it early. Okay, so Hash said they paid around 10 cents a share, and at $6 a share, it's at 1.5%. No, that's 15%. No, 1% would be $6. So yeah, it's about 1.5%. And is that monthly? Let's see. They're able to rotate the underlyings to the highest implied vol stocks and also buy puts for downside protection to try and preserve the NAV. Their strategy changed after a very poor start to the ETF. You can see it in the chart. The flat steady up is when they changed the prospectus. Interesting. So you must be talking about right here, where it was trending down to 545, and now it's been creeping back up. That still sounds weird. So they're buying puts for downside protection. That's cutting into their covered call profits, though. So I'm... Yeah. Which that dividend seems pretty underwhelming. Unless they're paying out once a week or something. All right, well, that'll be fun. Let me yeah, so the way that my the way that Restream works, Magic P, I can't even click that link until I think until I end the stream, because it just keeps wanting to let me show the comment. So drive-in theaters, let me just see if I can find it. So Elon, drive-in theaters, drive-through theaters. Order food at the New Hollywood Diner directly from the screen. Is that not what we're talking about? He posts way too much for me to figure this shit out. Oh, that's kind of interesting. Yeah, if they're providing entertainment at the supercharger sites, that's kind of cool. So you can get food and entertainment while you supercharge. What the frick? Okay, well, New World is coming. Angry Bit just bought a few January 26, 360, 390 call spreads on Tesla to get something on January 26. Yeah, that makes sense. That's 5 months out. Plenty of time for something to happen. And that shouldn't be affected by earnings crush or anything too, because it's so far out. So that kind of makes sense. All right. So I think just a quickie for today. And see you tomorrow for episode 444. Should be fun. I'll do a deep dive on the covered call challenge, covered call ETFs, and we can talk about time travel and shit like that. What's up, Tony? Any suggestions for high IV stocks that would work well with the wheel, covered call, performance covered call on smaller accounts? Spoke to a friend thinking about doing this, but their account is pretty small, around 5K to 10K max. I had nothing to offer as I only deal with strategy. Yeah, with my smaller account, I run the wheel on the mining stocks. So CLSK, Riot, those are the two most liquid mining stocks. I don't know anything about mining stock fundamentals. I don't waste my time researching that stuff because it's not something that I would consider a long-term trade. I'd just be trading the premiums. I just got into these Strive positions. Their options prices are a little wonky right now. They're paying decently, but the stock is a little too cheap. I think that would be hard to get meaningful premium reliably. If Strive's price dips down to $2 or $3, that's a little too cheap and difficult to get meaningful premium out of. I think around $10 a share is kind of the sweet spot. Anything too far under that, like you can kind of get by with $7, $8 a share. But once you get down into the fives, it makes it harder. Plus with ASST, the tick is in increments of 5 cents, which kind of annoys me and pisses me off a little bit. But CLSK and Riot both trade the options premium. It trades in increments of pennies, and the bid-ask spread is usually pretty tight. So those are kind of my go-tos. But I've traded Iron in the past. They're not terrible. They're a little bit pricey now compared to Riot and CLSK. And let's check their liquidity. Liquidity is pretty good on the short-dated stuff. Not a lot of open interest. If you open up Riot, you'll see hundreds, maybe thousands of volume and open interest. So that's kind of a caution. The other one that I've traded in the past that doesn't have as good a liquidity either is Hut. And that one's quite pricey compared to Riot and CLSK. And I think their liquidity was not quite as good either. Yeah, volume and open interest is much smaller than a Riot, which is very heavily traded. But keep in mind, I'm not a believer in the mining stocks. Like, I think they'll probably go with the Bitcoin cycle. So if Bitcoin pumps, the mining stocks would pump. But I would be hesitant to stay long in the mining stocks in anticipation of the next bear market. They get hammered pretty hard. But you can see the volume is in the thousands on Riot. And let's just look at like 5 years of Riot so we can include the last bear market. So we had that massive pump in 2021. And then garbage down through 2022. Kind of trying to make a comeback as we entered the bull market. But then kind of just drifting down. Kind of sad, really, because all of 2024 and 2025, you would think this would be pumping. And it's just giving us these pump and dumps kind of thing. And now with Bitcoin trending up again, we're getting some movement. But like I said, this isn't something that I would necessarily want to hold into a bear market, because you might not be able to collect enough in premiums to justify the long position. CLSK, also same deal. We pumped. I'm assuming that coincides with Bitcoin's pump. Yeah, Bitcoin 56, 57. But then again in November. Yeah, so then we had another jump here. So it's basically giving you some spikes when Bitcoin spikes, and then, you know, a couple of years of bear market, you're dealing with this. Not that you can't collect premium here, but when like I was saying, when the price of CLSK was down at $2, what are you going to be able to squeeze like 2 cents out of this thing, which is barely bigger than the bid-ask spread? So when CLSK was down here at 7, this was still reasonably tradable. But if it's going to be this low during a bear market, like, you know, maybe you get in and get out before the end of the year with some of these Bitcoin miners. Or we get a super cycle and it doesn't go down. But yeah, just for an example, you know, you can get 2.5% return on capital in less than a week, you know, selling very aggressive cash secured puts. Now, I've done this and the price has gone down to $8, so you have to be careful of that. But you can also, these are the ones that I got my brother-in-law into so he could kind of learn the strategy. So I think I had him out here selling which ones? Yeah, out to 822, like selling the $10. So not collecting as much premium, but also taking into account, like if the price does drop 10, 20%, you're getting a pretty good discount. So this is kind of like training wheels here, is going out to 45 days and selling a cash secured put 10 to 20% out of the money, or, you know, buying 100 shares and selling whatever, something in this range, collecting a meaningful amount of premium every 2 to 3 weeks. But there's some TradFi stuff you could probably find as well. I think the Palantirs and the, if you don't mind investing in the downfall of civilization, that's probably decent premiums. What's up, Josh? Optimus Sexbot. Lot lizards at the charger stations next. Yeah, I mean, if it comes with a free charge. Let's see. Schwab has negative $21 EPS estimate for 7/31. Yeah, so we should probably talk about that a little bit. I was asking Grok about this too, and Grok actually estimated their earnings pretty accurately. And so I said, well, if consensus estimates is like 10 cents a share, are they just dumb? And Grok's like, no, they're not dumb. They're aware of it, but they ignore it in their EPS calculations just so that it's just about the business. They're just looking at the business itself. And so then I was asking Grok about the algorithms. It's like, okay, well, are the algorithms trading on that EPS number that everyone knows is wrong, or if the trading algos are aware of the real EPS? Because I mean, if I figured like if Grok knows the damn can give a reasonable estimate of the EPS, like I don't know, if Grok is the only AI out there that knows it's happening, then I guess Grok 4 really is the best AI. But you would think that these billion-dollar companies would have the best of the best out there. So Grok didn't seem to think that that there was going to be much of a shock there, and that the real EPS is kind of known, but not, and is kind of like intentionally ignored, but they do know. And so maybe that was why the huge EPS miss that was reported last quarter didn't move the stock at all, right? When we had our earnings call, it was like this massive negative EPS because Bitcoin had lost so much value in Q1. But where was that? Was that like May? Yeah, whenever the earnings was in Q1, like nothing really happened to the price. Nobody cared that they missed their earnings by an order of magnitude. So if the price didn't go down because they had a massive negative EPS, maybe nothing happens with this massive reporting of positive EPS. Now, that doesn't mean that I'm going to leave all my covered calls on. I'm still going to, I think it's prudent to at least not to have as few covered call positions on as possible. So I guess I'm urging caution, not financial advice, but urging caution, like assuming that the price is going to go up. But I think it's at least prudent for me to take off as many of these covered calls as I can stand, just in case something cool happens. But one thing that I will not be doing, and other people are free to try to scratch off a lottery ticket if they want to, but let's see, on August 31st, I'm not going to be out here YOLOing into 1 DTE long calls and shit like that. That's something that I definitely will not be doing. But I think that position is a lot different than just taking off some limited upside positions. Is a little bit different than YOLOing into short dated long calls. So won't be doing any of that, but I am going to take off as many of these covered call positions on July 31st as possible. Let's see. That friend needs to focus on building his account each month. He can simply allocate to strategy. Yeah. 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 If he has a small account, you can just buy 10 shares. You can just buy 10 shares of strategy and wait for the 10-to-1 split. Let's see. Have you thought about rotating a portion of your strategy into maybe Metaplanet or other treasury companies, maybe when Metaplanet gets options? Yeah, if I can get Metaplanet on Robinhood or Tasty Trade where I just do all my normal trading, I'll 100% take a position in Metaplanet. Like, it won't be meaningful compared to my strategy, but more as like an attaboy for Dylan for, executing the strategy well. And yeah, and for sure, I would prefer that they have an options market so that I can collect my premiums that I love so much. What's up, CT? I know we talked about it a little bit, but do you have expectations for market reaction to the earnings call? Okay, so that's what I just talked about. Yeah, not making an assumption, but I will be positioning myself to capture most of it if it does happen. Schwab doesn't have the EPS estimate at 21. That's their EPS at 21.80. They still have Q2 estimate of -9 cents. Yeah, I think they know what the real EPS will be, but they're just ignoring it because when they report out their EPS predictions, it's just related to the business holdings. They ignore the balance sheet on purpose. It's not like they don't know it. They know it. They're just, I don't want to say they're cooking the books, but they're intentionally reporting it out to only account for the business. Buffalo says, standing pat on my 10 delta short calls over earnings. For what expiration date? Is that weekly? Where's the 10 delta get you? Oh, going the wrong way. 10 delta. Basically 500 a share. Yeah, I mean, if you capture, I guess it would have to move up more than 20%, right? $80 a share would get us to 510. So if you capture 20% up move, that's still pretty decent. Yeah, I put on my positions so long ago that they're already very low. Like the deltas that I'm in are like like way down here. They're like 40 and 50 deltas at this point. So good luck. I hope those work out. All right, now we're caught up on the chats again. So we'll call it a day and hope to see y'all at 2 p.m. Eastern for the magical episode